Let us understand the special provision in respect of specified business. In this particular section 80 IAC, the deduction with respect to startup business is being defined, and what are the conditions associated with startup business for claiming this particular deduction. If you see, there are 4 subsections under this section. What is the eligible deduction that can be claimed is 100% of profit and gains. While computing the what is the deduction amount, we have to presume as if the assessee has got only this particular business. If he has various businesses, while computing the total income, we have to consider as if the assessee is operating only this particular business, that is the startup. This has to be calculated in that presumption. And subsection 2, if you see that 3 consecutive assessment years out of 7 years beginning from the date of incorporation, the deduction can be allowed. Prior to 1/4/2021, it was 3 out of 10 consecutive years. Now it is 3 out of 7 consecutive assessment years the deduction can be allowed. Coming to subsection 3, it says the startup should not have been formed by splitting of the existing or reconstruction of the existing business, or it should not have been transferred the plant and machinery of the existing business to the new startup business. Of course, they have given some explanation which we will see it in the next slide. What are the conditions that are applicable for this particular subsection 3? And coming to subsection 4, that they say that provisions of section 5 and section 7 to 11 of section 80 IA are equally applicable for this particular section as well. Okay, these are the 4 subsections which are defined under section 80 IAC. Okay, coming to various explanations given. They have given explanation with respect to what is a startup, a company or a LLP. Eligible startup means a company or LLP. You have to remember that startup can be a company or LLP only, not any other constitution of the organization. Only a company or LLP can claim deduction under section 80 IAC. And they have defined what is a eligible startup, that it is incorporated between April 2016 to April 2022. Earlier, this was April 2021. They have extended another year up to April 2022. And the turnover should not exceed 25 crore. Earlier, this turnover criteria was also 100 crore, but from 1st April 2021, they have made it 25 crore. So, more entities will fall under claiming this particular deduction. It holds a certificate issued that the Interministerial Board of Certification, they are issuing for every startup. They are issuing the certificate. That certificate should be available with this particular startup. Then only this deduction it comes under a eligible startup. And they have defined what is an eligible business. All businesses will not be considered. You have to remember that the eligible startup engaged in innovation, development or improvement of products or services or a scalable business. Then only this particular startup will be eligible for deduction. Of course, this criteria is almost verified by the Ministerial Board of Certification. However, it is our responsibility before claiming this particular deduction, and this deduction has to be application has to be made to claim this particular deduction as well. And coming to plant and machinery, which we discussed in one of the subsections of section 80 IAC, that the plant and machinery, if it is used outside India and not claimed any depreciation in India, then it also qualifies for this particular deduction. And suppose if the existing business plant and machinery is transferred to new entity of a startup, then that particular the percentage of the total plant and machinery in the new entity should not, the old machinery should not exceed more than 25% of the total plant and machinery of the new entity. If these two criteria are satisfied, still this particular deduction can be claimed by the startup. And they have defined what is a LLP. That LLP is clause N subsection 1 of section 2 of LLP Act 2008. Then this particular startup will be called as a eligible startup. Okay. So this is the criteria under which section 80 IAC deduction can be claimed. This is very important because now many startups have come up, everyone is aware. So it is better to go through this section and make an application to the department for claiming the deduction for 3 consecutive assessment years out of 7 years beginning from the assessment year in which the startup has been incorporated. Thank you.